All right, my favorite people, Sterling White here, and I'm back at it again with another topic for you on how to structure a real estate syndication. So you'll definitely want to stay tuned if you're considering this, when to use it, how to structure it, and of course, those of you on the YouTube, smash that like button. No, matter of fact, Hulk smash that like button. And then those of you who are listening on the podcast, I really appreciate you. Of course, everyone on YouTube too, but let's go ahead and jump right into it. All right, and so the next question you're asking is, what is a real estate syndication? So in its simplest form is a real estate syndication is when a group of investors pools together their capital to jointly purchase a large real estate property. And as an example is one of the properties I purchased, and when I say there was a team involved, was just over $6.2 million. 30% of that 6.2 was needed for a down payment that was raised from investors, and then also $2 million was needed to make repairs to the property and improvements. So that was also raised from investors. So that is pulling together funds from investors to acquire a larger deal. So next is, how is this going to be structured legally? As much as I'd want to go into this, I'm not an attorney, so gotta make that disclaimer, but you generally have an LLC or an LP depending on which state you're in. But again, you want to seek legal counsel on that, because as a prime example, that deal I mentioned to you earlier there was a LLC of the holding company of which both my partner and I were the GPs on, and then an LLC was filed that was owned the property, and then investors purchased shares and ownership within that LLC, and they had 85%, and then us as a GP, we had the 15%, and that was based upon the equity structure. 85% went to the LPs, and then 15% went to us as the GP. Additionally, you'll want to keep in mind the type of investors that you're partnering with, whether it's accredited investor or non-accredited investor. And with the accredited side is that by definition, an individual with gross income exceeding $200,000 in each of the 2 most recent years, or joint income with a spouse or partner being over $300,000, and then also the net worth being over $1 million. So if they don't hit those specific requirements, and there's some additional ones, then they're non-accredited. And with that it tends to be less intensive from a legal structure standpoint to just target accredited versus the accredited side of things. So the next is, what are the benefits when it comes to a syndication? Is that with this, it allows you to pull together resources to acquire deals you may not otherwise achieve on your own. And with this, you can get more so economies of scale. Because if you were to use your own cash, you may not be able to buy as many units, but now you're able to partner with more individuals that have more access to capital, and now you're able to acquire larger deals in this case. Now, how does a syndicator make money? And there's plenty of ways that go into this, such as fees. So there's an acquisition fee, which is exactly what it is that you make a fee for acquiring the property and essentially putting the deal together. And that can be anywhere between 1% to 3% of the purchase price. There's a construction management fee. There's a guarantor if you're signing onto the loan fee. And these are ones that you can do on the front end. And then also you have your ongoing fees, such as your asset management fee, your property management fee. And on top of that, you still have your equity as well, which is a way that you're making money. So as that example I provided earlier, is that of that structure, 85% equity went to the limited partner, so the investors, and then 15% went to both my partner and I as the GPs. So each and every quarter, let's say there is $10,000 to be dispersed in income, is investors get $8,500, and then we get our $1,500 on our 15% equity stake. And then also there's a disposition fee as well. So once you sell the property, there's a fee assessed to that. And then also you get your split of the profits based upon your 15%, as that example I provided to you. What does the deal sponsor do? Does a lot. Multiple hats, from finding the deal, from analyzing the deal, having the conversations with brokers and negotiating, or going off market, making all these calls and nurturing relationships. So that's on the front end. Then there's the due diligence once the property is actually under contract. And then there's the ongoing management just to ensure that the property performs on the original projection. So there's a lot that goes into it as you being the sponsor or the GP or the operator, because there's different terminologies that they are called, or myself is called, or syndicator as an example. So that's all I have for you all as my closing thoughts. It's a book by David Linhall, Multifamily Million. So I appreciate you all so much. And if you just want more insights on how to scale or bridge the gap from where you are to where you want to go, there's a link below to schedule a strategy session. And of course, Hulk smash that like button, those of you on the YouTube. And if you watch this all the way through, go ahead and put below, what should I say is, go ahead and put syndication in the comment section. There we go. And then those of you who are listening on World Star Hip Hop, SoundCloud, etc., leave that rating. It would really mean the world. Keep being awesome. Thank you so much. All right. Whew. Damn.